Welcome back to XRP Matrix. What if the biggest XRP story of the year isn't coming from Ripple at all? What if it's coming from two of the most influential financial powers on Earth, the Bank of England and Japan? While most investors are watching price charts, something much bigger is happening behind the scenes. Central banks are accelerating discussions around the future of digital money, payment infrastructure, and cross-border settlement. And if you've been paying attention to what XRP was built to solve from day one, you already know why this matters. The headlines may look like another routine banking update, but beneath the surface, they point toward a financial system moving closer to real-time global settlement. Today we're breaking down why these developments have XRP holders paying close attention, why institutional interest continues growing despite market uncertainty, and why many investors believe the next chapter for digital assets could look very different from the last one. For years, XRP supporters have argued that the real value of blockchain technology wasn't speculation. It was efficiency, it was speed. It was reducing friction in a financial system that still relies on processes designed decades ago. While the crypto industry often focused on memes, hype cycles, and short-term price action, Ripple continued talking about international payments, liquidity, and settlement infrastructure. Many people dismissed those ideas because they weren't exciting enough to dominate social media. But now, as major financial institutions and central banks explore digital payment frameworks, those conversations suddenly sound a lot more relevant. The Bank of England and Japanese financial authorities aren't talking about overnight riches. They're talking about modernizing the movement of value itself. And that's exactly why this story deserves attention from anyone following XRP's long-term potential. One of the biggest challenges facing the global financial system today is that money still moves slower than information. You can send a message across the world instantly, yet transferring value between countries often remains expensive, fragmented, and delayed. Businesses face settlement risks. Consumers face fees. Banks deal with multiple intermediaries. This isn't a new problem, but it is one that financial leaders increasingly want to solve. That's where discussions around digital currencies, tokenized assets, and blockchain-powered settlement networks continue gaining momentum. The significance of recent announcements isn't necessarily about a single technology winning overnight. It's about confirmation that the world is actively searching for better infrastructure. Every time a major central bank publicly discusses improving payment efficiency, the conversation naturally moves closer to the use cases XRP was originally designed to address. Japan has long been considered one of the most forward-thinking countries when it comes to digital asset regulation and financial innovation. Unlike many jurisdictions that spent years debating whether crypto should exist at all, Japan focused on creating frameworks that could support responsible growth. Financial institutions there have repeatedly explored ways to combine traditional banking systems with emerging technologies. When Japanese policymakers discuss digital settlement systems, markets pay attention because the country has a history of embracing innovation while maintaining strong regulatory oversight. Investors understand that large-scale adoption doesn't happen through hype. It happens through infrastructure, regulation, and trust. That's why developments coming from Japan often attract interest from institutional participants looking for clues about where global finance may be heading next. The Bank of England occupies a similarly important position within the global financial landscape. Its influence extends far beyond the United Kingdom because its decisions and research often shape broader discussions around monetary policy and financial modernization. When the Bank of England examines digital payment systems, tokenization, and settlement innovation, it signals that these concepts are no longer fringe ideas. They are becoming part of mainstream financial planning. For XRP holders, this matters because every major institution exploring more efficient payment rails indirectly validates the problem Ripple has spent years trying to solve. Whether XRP ultimately becomes a major part of that future or not, the industry is moving toward faster, more connected financial infrastructure. That trend alone is difficult to ignore. One thing many investors get wrong is assuming adoption happens in a straight line. It doesn't. Financial transformation is often slow, complicated, and filled with periods that look boring from the outside. Markets tend to focus on immediate price movements because they're visible. Infrastructure development happens quietly. Regulatory progress happens quietly. Institutional testing happens quietly. Yet those quieter developments frequently create the foundation for future growth. That's why experienced investors often spend more time watching what institutions are building than what social media influencers are saying. The most important changes rarely arrive with fireworks. They arrive through pilot programs, partnerships, regulatory frameworks, and gradual integration into existing systems. That's exactly the type of environment we're seeing develop today. Another reason this story has captured attention is because it arrives during a period when tokenization continues gaining traction across the financial sector. More institutions are exploring how real-world assets can be represented digitally. Governments are examining digital currencies. Banks are researching blockchain-based settlement solutions. Asset managers are discussing tokenized securities. All of these trends point toward a future where value moves more efficiently across networks. In such a world, liquidity becomes incredibly important. The ability to transfer value quickly between different assets, jurisdictions, and systems becomes a competitive advantage. This is one of the reasons XRP supporters continue emphasizing the asset's role as a bridge for cross-border transactions. Whether that vision reaches its full potential remains to be seen, but the broader industry trend certainly moves in that direction. What makes this moment especially interesting is the contrast between public perception and institutional behavior. Public conversations often focus on volatility. Institutions focus on utility. Retail traders worry about daily price swings. Financial organizations worry about reducing settlement costs, improving liquidity management, and increasing operational efficiency. These are completely different perspectives. When major banks evaluate technology, they aren't asking whether an asset can trend on social media. They're asking whether it can solve expensive problems. That's why developments involving central banks attract so much attention among long-term investors. They suggest that the discussion is gradually shifting from speculation toward practical implementation, and practical implementation is where sustainable value tends to emerge. It's also important to understand that competition in this space isn't necessarily a winner-takes-all scenario. The future financial system may involve multiple technologies working together. Different blockchains may serve different functions. Stablecoins may coexist alongside tokenized assets. Central bank digital currencies may interact with private sector networks. The question isn't whether one solution eliminates every other solution. The question is which technologies become useful enough to earn a place within the broader ecosystem. XRP supporters believe the asset's speed, scalability, and focus on cross-border settlement give it a meaningful role to play. Whether markets ultimately agree will depend on adoption, execution, and regulatory clarity over time. Regulation remains one of the most important factors shaping the future of digital assets. For years, uncertainty slowed progress because institutions were reluctant to commit significant resources without clearer rules. That environment is gradually changing. Governments and regulators around the world are developing frameworks that provide more guidance for market participants. Clarity doesn't guarantee success for any particular project, but it creates conditions where innovation can move forward with greater confidence. For XRP, regulatory developments have always carried extra significance because of the asset's highly public legal history. As clarity improves across the industry, investors increasingly focus on utility, adoption, and long-term fundamentals rather than endless uncertainty. Another fascinating aspect of this story is timing. We are entering a period where multiple trends are converging simultaneously. Artificial intelligence is transforming business operations. Tokenization is reshaping asset management discussions. Stablecoins are expanding rapidly. Central banks are researching digital currency frameworks. Financial institutions are exploring blockchain settlement. Each trend alone would be significant. Together, they create an environment where demand for efficient value transfer solutions could increase dramatically. That's why announcements from major financial authorities often generate so much excitement among XRP supporters. They are viewed not as isolated events, but as pieces of a much larger puzzle that continues taking shape. Of course, it's important to remain realistic. No single announcement changes everything overnight. Markets often move slower than enthusiasts expect. Adoption takes time. Testing takes time. Regulatory approval takes time. Even the most promising technologies can require years before their full impact becomes visible. But long-term investing has never been about predicting tomorrow. It's about identifying important trends before they become obvious to everyone else. That's what makes stories like this worth following. They provide insight into the direction institutions appear to be moving, even if the destination remains years away. As we wrap up today's update, the key takeaway is simple. The Bank of England and Japan aren't suddenly endorsing XRP directly. What they are doing is contributing to a broader global conversation about modernizing financial infrastructure, improving settlement efficiency, and preparing for a more digital future. Those are exactly the kinds of developments that many XRP investors have been watching for years. Whether you're bullish, bearish, or somewhere in between, it's becoming increasingly difficult to deny that the financial world is evolving. The real question isn't whether change is coming. It's how quickly it arrives and which technologies are positioned to benefit when it does. For XRP holders, that's why these announcements matter. Not because they guarantee anything tomorrow, but because they may offer another glimpse into where global finance is heading next. Thanks for watching XRP Matrix, and we'll see you in the next update.